stuff that's going on today. I think R3 is in a unique position where we can say that we're actually kind of boots on the ground doing things in production. There are some pilots and POCs that I'll talk about just because they're so exciting I can't leave them off the table. Okay, so let's get started. Why blockchain? I'd like to kind of start from this slide because I think it sets the stage really nicely. You know, if you think about the world before the internet, I'm going to take the example of a buyer and a bank. But any two parties that wanted to transact in any way, really there were 4 layers that they needed to go through. So action, perception, processing, and ultimately the communication protocol. So if you think about what that means, you say maybe I'm a buyer and I want to do a trade. So the action is I want to do the trade. The perception is what are the details of that trade. The processing, or how do I take those details and package them in a way that is I process them and package them in a way that I can facilitate the communication protocol, and then I put them in an envelope, or I put them in a fax, or I send a courier, or whatever, and that's the communication protocol. So today we live in an age where the internet kind of gives us that standardized communication protocol, so we know we can all talk to each other kind of concurrently, but at the same time the processing, perception, and action are all kind of siloed. When I think about blockchain and blockchain revolutions across industries, really what we're doing is we're moving to a world of shared ledgers. And the world after shared ledgers essentially creates a scenario where not just do we not just share a communication protocol, but we also share a perception of our processing logic and the processing logic and the shared perception of the action. If you package all those things together, you can think about that as kind of one version of the truth. The subtlety here is that it's one version of the truth across potentially distrusting parties. Now, depending on which industry you're in, that has significant implications on your business. You'll notice also at the top that the action is kind of left siloed. So I can decide when and what I want to do with my counterparties, but once I decide that I want to do that, I should be able to share the processing, perception, and communication protocol with each other. If we think about what this looks like kind of from like a network topology standpoint, this is a very familiar picture, this kind of centralized model. You can see that there's advantages in moving from a centralized model to a decentralized model. So, if that hub goes down, there's still nodal hubs that are going to be there to support the clients. If I was kind of this client down here at the bottom, I'm closer to a hub than maybe potentially down here. But overall, the topology of the network is relatively the same. A lot of people think of decentralized and distributed as the same thing, but I'd like to impose upon you that distributed is actually a fundamentally different way of thinking about networks. And this doesn't just cascade through technology, it obviously also cascades through business requirements as well. So I spend a lot of my time talking to clients that kind of perceive their business as this, and I try to tell them this is where the future is and this is where you're going to go. And their next question is, where am I on that picture, right? So you really need to kind of bend your thinking, both technologically and on the business side, to fit into this mindset. So this is kind of what we're going to be looking at moving forward. So I'll switch topics a little bit now and talk about R3, and then I'm going to bring it back and talk about Corda as an implementation of a distributed technology. So R3 started in 2015. We started very much as kind of a research consultancy group. The idea was back then that financial services, blockchain was just getting started, and financial services really wanted to understand how is this going to impact their business. We started with a group of 9 banks, it quickly grew to 42, and so on and so forth. Very quickly, we realized that none of the platforms at the time were capable of going into production within these regulated institutions, and that's when we decided to build a product called Corda. So today, Corda is a flagship product. Corda ships in 2 versions, Corda Open Source and Corda Enterprise, and I'll talk a little bit about what those are and how they're related to each other. 2016, we released Corda Open Source. 2018, we released Corda Enterprise, and since then, we've been working on our partnerships and our ecosystem and our community. So that's kind of roughly the historical context for R3, where we come from, what we've done, and what we're focusing on moving forward. If I wanted to kind of blow this up a little bit bigger for the people that are taking pictures, I think about our ecosystem and our clients and the people that are using our products would roughly map to this slide, and I apologize if it's moving so quickly that often people see this and say, hey, where am I? And then I have to hide somewhere. If I think about kind of our technology partners broadly, delivery partners, solution partners, infrastructure, and network service partners as well, so we kind of split up the ecosystem roughly like this. And in another view, I would connect between the ecosystem and the technology and show this picture. So in the middle, you see kind of Corda Open Source, and the core of our technology offering is an open source protocol. So you can go into GitHub and you can Google Corda GitHub and download the entire Corda implementation from a functional perspective. Around that, there's a ring that we call Corda Enterprise, which is a layer of additional features on top of Corda, and I'll talk exactly about what those are. And then around that, you can see kind of the ecosystem of our members and partners, okay? So hopefully that makes sense. And I'll switch gears again and talk a little bit about the technology that kind of is the kernel underneath all this stuff. So when I think about Corda, I think the first kind of thing to think about is that we're living in a private permissioned world. So Corda is fundamentally a permissioned network. We have an identity service that governs the participants and their roles on the network. So when you're transacting on Corda, there's no kind of anonymity with who your counterparties are. You always essentially know who you're talking to. Corda uses private chains, so Corda only really shares transactions with your counterparties. So if you think about kind of starting from a bilateral relationship, if you transact on Corda, we're all part of a big Corda network for whatever functional purpose we're on, and two of us are transacting. Not only does no one else on the network have access or a copy of our data, encrypted or not encrypted, no one else on the network also knows that communication protocol even happened. Okay, which is it's a subtle point, but it's very important. And this kind of ripples through the architecture on Corda and makes it a very different way of thinking about distributed applications. If you think about privacy and scalability and things like that, this connects to that kind of intimately. The communication protocol also being siloed is very important from a business perspective. If you think about being kind of at a party and you see two people talking back and forth, even though you don't necessarily know what they're talking about, it could potentially leave you feeling out. But if you think about that in a business context, it's roughly the same thing, right? So in a business context, the communication protocol and the underlying data is entirely encapsulated between the transacting parties. We start from a bilateral relationship, but that can also go up to a multilateral relationship. This is very different than starting from a broadcast base, everybody knows everything, and slowly kind of siphoning it down to a bilateral relationship, transaction-based model. So this is kind of what that would look like. If I think about Alice and Bob are both doing things and they're sharing facts, right? Alice and Bob, facts 1 and 2 would exist at the intersection of both Alice and Bob, but at the end of the day, Alice and Bob both have their own very distinct data set, depending on who they're transacting with. And I saw some of you laughing, so some of you are reading the slides.
That's cute.
So peer-to-peer network communication. So transactions on data are peer-to-peer using messaging queues. So really the idea there is simple. When you transact on the internet today, even though you think you're talking to Google or you think you're talking to Facebook, you're being routed through all these different servers and all these different protocols. On Corda, when two Corda nodes are communicating with each other, they're using a messaging queue, AMQP over TLS, and they're talking to each other and only to each other. So there's no intermediaries on the protocol itself, which is also an important aspect. Consensus with finality. So this is also an interesting topic. I was listening to the talk with the Hedera Hashgraph and some of the other platforms. The notion of finality for enterprise organizations is really important. And finality is just what its name implies. It's the notion that you can transact, and that transaction is final, right? It's not probabilistically final. It's not probabilistic final in some range of time. In Corda, a uniqueness notary, and validation is done by the transacting participants. The uniqueness notary, once the uniqueness notary notarizes a transaction, that transaction is final and synchronized and immutable across all the participating parties. So finality in Corda is deterministic, and it is time-bound and irreversible, okay? Provenance and immutability. So provenance, the ability to take an asset and kind of see all the way back, and immutability, once a transaction happens, it's immutable and it can never change. So states that have been notarized are immutable across all participating parties and linked back through the transaction history to create chains of provenance, whatever that transaction actually is. Performance and scalability. So Corda uses something called the unspent transaction model with the unfortunate acronym of UTXO. This is similar to the Bitcoin protocol, and this is in contrast to something called the accounts model. The main aspect of that, other than when you're actually doing kind of solutioning architecture, is how well it lends itself to very high volumes, very high throughput. 6,300 transactions per second is something that is publicly known. It was an experiment that we did with the DTCC, along with Accenture, and it was very interesting to see that Corda could actually clear all the equities and settlements in the U.S. At peak volume at steady state. So the majority of the time, for a lot of the applications out there, we look at scalability and performance, and we kind of have that in the bag. Observers. So this is a good one, and this is kind of why regulators and compliance officers love us. So Corda uses something called observer nodes, and these observer nodes enable auditability of transactions. Now that doesn't mean that there's kind of some kind of like God mode on Corda, that you can see everything all the time. But what it does mean is, as a business network operator or as an application builder, you can say, you guys are all communicating bilaterally, multilaterally. The business network has nothing to do with it, but you know what? We're going to introduce a notion of regulation, and every transaction that's above $100 million between these geographies is going to be reported back to a regulatory node, and this regulatory node is going to be able to see only the amount and the recipient to make sure that there's AML, adherence to AML policies, for example, right? So this kind of gives businesses the ability to distribute their business logic, but still maintain whatever controls they want to have over visibility of the data. This is different though than I want to contrast this with the central party, with the party being a part of the transaction. But if you think about a lot of the business models today that are hub and spoke, they say, well, everybody comes to us, I'm the exchange, so everybody's going to come to me, and then I do the transaction and return the results. If you enable all the peers to communicate peer-to-peer privately, then what you can say is, I just want to get reports on the volumes. I don't care necessarily who you are, but at the end of the day, I need to know how much was traded in my network, for example. So this is as intrusive or as little intrusive as you set it up to be. Oracles. So oracles are nodes that inject third-party data into a ledger in a deterministic way. And this is a great solution. When you think about any kind of blockchain platform, the notion of determinism is very important. And the reason is because what you transact today, and you create a chain based on that transaction, in 20 years when you're doing something, you could be doing something that will be dependent on a transaction that you did today. So that's, I'll call it kind of relatively simple to do deterministically, as long as all the data lives in your ecosystem. But what happens when you need to go to Bloomberg or Thomson Reuters and get an FX rate and make a trade based on your FX rate today, and then you want to make a trade next year? Are you going to go to Thomson Reuters and say, hey, what was the exchange rate on October 4th, blah, 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 and you'll get something different and the whole thing will break down? That's what observers are there for. So observers are in a way that are this kind of like a deterministic API that takes data out from external sources and injects it into a ledger in a way that you can count on for blockchain applications. The interesting thing about this is you can consume observers and you can also output observers. So if you're building a business and building a Corda network that you believe has data that is relevant to other business networks on Corda, you can create Oracle nodes that people can call and open APIs to external parties. Code of Legal Pros, so there was actually a talk earlier today about the connection with digital contracts and some of that stuff. And it was great to see that at the end of the day, the community is coming to consensus around the fact that digital contracts aren't going to replace legal contracts. On Corda, digital contracts and legally binding contracts kind of come together as the same package. So when you build a Corda application and you say, these are the things I'm doing and these are the rules that govern the things that I'm doing, those things that govern the things that I'm doing, they come in two packages. One package is a digital package, and that will govern the behavior on Ledger, and another package are these legal pros. And these legal pros are meant to be there on purpose so that I, as a business, don't have to throw away the book of what I've been doing for the last 50 years and move into this digital world without confidence that I have a safety net that I can fall back onto if there's any reconciliation that needs to be done from a legal standpoint. Probably the least sexiest point on the slide deck is that it's all built with existing technology. So I do a lot of tech training, I do a lot of tech training stuff. My background is engineering and computer science, and sometimes when I sit with a room full of technical people and I'm like, okay, well, I'm not going to introduce any new technology that you haven't seen before, they're all really bummed out, but I'll take that downside for the upsides. And the upsides are two things. First of all, if you want to build on Corda, you don't necessarily have to learn about tools that you have never seen before from a technical standpoint. It's Java, it's based on SQL-based databases, messaging queues that exist in enterprise, all that stuff. So for most organizations, they have an arsenal of technical people that all can speak the language that Corda speaks. From probably an even more important perspective, I can't exaggerate how many projects have come to us only as a consequence of the fact that their pilots and POCs have been built on technology that won't be able to go into production, because in regulated organizations, there's hundreds of people sometimes that come to work in the morning just to say no, right? And they say no because this can't enter into our on-prem system. Why? Because I don't really know what it is, and it hasn't been tried and tested and so on and so forth. So this makes my life a lot easier, because at the end of the day, when you build something on Corda and you go to some of the most regulated organizations in the world, you can look them in the eye and say, everything that I've built on is actually already running on-prem behind your firewalls and has a history of sometimes up to 30 years of enterprise-grade technology. So we just put it together in a way that looks a little bit different, but generally speaking, it's all legacy system. Existing technology legacy system oriented. Last but not least on this kind of set is this notion of a globally interoperable network. Now what's interesting here, interoperability is a word that's kind of used a lot in the context of blockchain. So is it interoperable? Is it interoperable? Everybody throws that into the air to see what the response is going to be. When I say interoperable in this context, I'm talking about interoperability at a business network application layer. In other words, if you think about a healthcare application and an identity application and some kind of payment application, if they're all built on Corda, they can all talk to each other. Now that doesn't mean that a settlement token or a payment structure of some kind turns into an identity. But what that does mean is that if I'm a user of Corda on a Corda node and I'm participating in those 3 different applications, I can decide if I want to execute this payment based on an identity credential that will facilitate the goods and services provided by the healthcare application. So I can intersect all those different business networks as long as I'm running them all at the same time on a Corda node. And the reason for that is because my identity, the notion of having a private permission ledger, I am the same entity on all those different business applications. So when you approach the Corda world, the interesting thing is that you're not siloed. You don't live in your own bubble. You can look and say, what is the business that I'm offering? How can other business networks consume the benefits that I'm providing, and how can I consume the benefits of other business networks? So it's a much kind of bigger picture in terms of, I would say, the value propositions that get unlocked as a consequence of that. I think a slide that kind of demonstrates how things have progressed in the industry, or at least our perspective of how things have progressed. The Bitcoin and Ethereum world was kind of one network to rule them all in terms of governance and structure and all that kind of stuff. The Fabric TA, Pico Assets, and Quorum was kind of split up and said, okay, we need privacy, we need permission, these things, but there isn't one governance structure to rule it all, so we're going to create networks that are kind of separate, but they're also siloed as a consequence. And Corda kind of introduces this notion of having private permission networks that can interoperate if they choose to be. So there's a lot of details here that you could go into, but that's the vision, and that's already actually happening on something called the Corda Network, and it's run by a separate foundation called the Corda Foundation. So I mentioned kind of Corda Enterprise at the beginning of this. I'll just kind of distinguish between Corda Open Source and Corda Enterprise. So Corda Enterprise is how we make our money. We're here to support the Corda Enterprise version of Corda. Again, everything we've talked about up until now all lives in the world of Corda open source. So if you want to go look at the source code, utilize Corda, and even take it to production, you can do so. You can do so for free. Corda Enterprise introduces a set of features on top of that. Those set of features are primarily there for enterprise-grade users. So if I want to work on Corda, if a small to medium-sized business wants to work on Corda, Corda open source is probably enough. Corda Enterprise, though, for the big banks, the governments, the insurance companies, the energy companies, so on and so forth, depending on who you are, you'll decide what flavor of Corda you need, depending on some of these functions. Don't squint too hard, because I'll talk about them in the next slide. The interesting thing here is that there's complete interoperability between Corda Open Source and Corda Enterprise. So in an ecosystem, you can all be talking the same language and doing the same type of transactions, but my deployment considerations mean that I can run on Enterprise, and maybe your deployment considerations maybe mean that you need to run Corda Open Source. There's no difference from a functional perspective. Some of those things are high availability and disaster recovery, commercial database support, security through access, firewalls, performance optimization, monitoring, management. The list goes on and on. It's a little bit boring and a little bit technical, but if you're an enterprise client, some of these things will make it or break it, will make or break your ability to actually use this kind of tool. Okay. So I hope that wasn't too technical or too fast. I'm trying to go through this as quickly as I can. Let's talk a little bit about real world applications and some of the stuff that we're doing out there in the market. And this kind of cuts across all types of verticals. So I'll try to be as concise as I can. So John kind of mentioned Finastra. Finastra is actually interesting because Finastra was our first production grade application. Finastra's LenderCom is a digital syndicated lending platform. For those of you that don't come from financial services and haven't heard of syndicated lending, the idea is relatively simple. Someone comes to you for a massive loan that you can't facilitate on your own. You turn around to other members and you syndicate that loan to the other members. What it really creates is this spaghetti of I guess, obligations and payables from the borrower to the agent on the loan, all the way to the entire syndicate. This is a massive, massive market. Finastra's LenderCom in 2018 in the US alone ran 60 to 65% of the syndicated lending space in the US that amounted to a $2.4 trillion marketplace. They've taken that entire operation and retooled it on Corda. What do you get from that? Well, you get transparency, you get the ability to have secondary markets, everybody knows their positions against their loans, so on and so forth. So this is an amazing example of probably the most, one of the most impactful production applications that are out there today. And you know what? I'll be honest, from a blockchain perspective, a lot of the people that use Finastra's LenderCom product, they don't even care that it's on a blockchain. And I love it that they don't care that it's on a blockchain. It's not about being on a blockchain. It's as little about being on a blockchain as it is that your computer backs up your Word documents to a SQL-based database. You don't care. You want to write your document. The people that are using Finastra's LenderCom, they want to syndicate loans and know their positions. That's all. EBX is a great one. It's also a Canadian one. I live in Toronto and I'm Canadian, so I love kind of showing this off around the world. So smart contracts on Ledger. The energy contracting and royalty space is insanely messy. Some of the contracts are over 100 years old, and when you think about all of the different stakeholders, when you take a barrel of oil out of the ground, everything that has to be done along the production life cycle, and ultimately the price that you sell the oil to, and then the price that you sell the oil at, and reconciling that price against all the individual stakeholders and royalty holders along the way, that process usually takes 90 days to execute. When it's done right, I'm not even talking about when it's done wrong and there's reconciliation and all that stuff. Guild One and the EBX team took a process that took 90 days and they took it down to 90 seconds. Okay? So what that does to the amount of capital that's trapped in that system is unbelievable. Their next phases are that they're going to actually take this royalty, and they're not just going to execute the royalty and distribute the payments. They're going to take the royalty and they're going to put it on an exchange, and they're going to trade the royalty itself. Okay, so imagine a big exchange that actually holds a royalty in real time, and the royalty is like a self-executing contract. Right? So as the energy gets produced, you can look at the royalty will pay dividends to its holders, so on and so forth. So they're at the intersection of a lot of things. They're doing this royalty contract specifically for the energy space because they happen to come from Calgary, Alberta. They're actually expanding now into Texas as well, but they're also looking at other royalty mechanisms that don't just relate to the energy. HQLA, so high quality liquid asset exchange, is also another interesting one. So the notion here is liquidity management and collateral management for institutional clients for global securities lending and repo markets. So repo markets have kind of been in the news a little bit lately. You guys might have heard they're becoming kind of a little bit more well known because some of the stuff at the Fed and their connection with kind of global market downturns. But the idea here is kind of intraday lending between institutional investors. So I have a little bit more high quality liquid assets than I need. You have a little bit less. How do we facilitate that trade on Ledger in a way that is compliant and actually kind of resolves to actual ownership of these high quality liquid assets? Marco Polo is a trade, is an open account trade and working capital finance solution. So this is also another great one. I'm gonna skip this one and also talk about Voltron because they're kind of the same. Voltron is a little bit of a different model. So there's an open account model in trade finance. There's a letter of credit model in trade finance. The difference is subtle if you don't know a lot about supply chain and about trade finance. But generally speaking, accounts receivables, trade financing, supply chain are all kind of connected to these. They're both in production. You can go ahead and Google them and look at who participate in some of the largest banks and corporates in the world that are joining these type of networks. It's actually some really, really exciting stuff. And now I'm going to talk a little bit about some pilot stuff because I can't help but kind of leave this out of the mix. These are pilots that are publicly known. So I think this is an important part of just, so up until now, everything I've actually talked about is in production. This isn't like fairy tale stuff. These are real enterprise companies that are actually transacting and moving money and assets on our ledgers. The Swiss Stock Exchange is now building a new version of itself called the Swiss Digital Exchange, and it's interesting. You know, I don't know if it's well known, but you know, when you think about kind of the reasoning for the Swiss Stock Exchange to move to the Swiss Digital Exchange, it isn't just them being forward thinking. It's actually, you know, their CEO basically came to terms with the fact that if they don't do something within 10 years, they will cease to exist. Okay, and that's something that is shared between the Swiss Stock Exchange and probably every other exchange in the world, so we're very, very busy in that space. So they're retooling their entire platform to exchange digital securities. The consequences of this are absolutely enormous. Probably the most important thing is taking assets that could otherwise not be part of an exchange and putting them as part of the exchange. So non-bankable assets all of a sudden become bankable. And then there's other things like fractionalization of assets and, you know, some of the things that other people kind of have mentioned earlier in the day today. Swift GPI, so we're working actually really close with Swift on kind of evolving its ecosystem. I feel like anywhere I stand, I'm kind of in somebody's way. Swift GPI, so Swift GPI is integrating itself directly with something called the Corda Settler. The Corda Settler is this notion that we understand that the payments landscape is moving really, really quickly. I was going to say really swiftly. It's moving really quickly, and we don't want to, I mean, I love it if everybody settled everything on Corda all the time, but at the end of the day, we want to be as flexible as possible, and what Corda Settler enables you to do, it enables you to put your business on Corda and say, whatever obligations I create through my Corda network, I can settle them through whatever other network I want. One of these being Swift GPI, one of them maybe being, you know, Ripple's XRP, one of them tomorrow being something that doesn't exist. Or, you know, you can walk up and pay in cash as well if that exists still by then. So Swift is kind of integrating their Swift GPI innovations with Corda and the Corda Settler. So very soon, anything that you do on Corda, you'll be able to settle through Swift. Another one that's kind of tangentially connected, and this kind of got released a week or two, maybe 2 weeks ago. So MasterCard is kind of betting the house on the B2B cross-border payments on Corda. I was really close to this. I'm close with the MasterCard team. This has been very, very future thinking, you know, MasterCard is like aggressively pursuing this space. So it's a blockchain-enabled cross-border payment solution that basically connects all these different faster payment systems together through already operating MasterCard schemes and MasterCard integrated infrastructure. So, you know, the added value of this is, you know, reducing processing overheads, increasing liquidity, enforcing more standardizations around global markets, all that kind of fun stuff. Wells Fargo did a big press release a couple weeks ago as well. So Wells Fargo is basically creating the Wells Fargo version of the JPM coin that kind of got a lot of wind. Maybe that was probably like 6 months ago. Wells Fargo just chose to do this on Corda. It's interesting because this is kind of, you know, to some extent an alternative to using Swift. So you can see that as a platform, we're not really picking any winners. At the end of the day, we want to see adoption. We want to promote everybody's businesses to whatever extent we can. So Wells Fargo is coming out with this internal transaction oriented coin. It still is yet to be named, but I call it the Wells Fargo coin. Last but not least, and this is probably the farthest away from production, but it's still very, very relevant, and I only have this slide up, probably because all this stuff around Libra and the fact that this is becoming a little bit more of a kind of conversation piece and a little bit more well-known. We've been working in this space for a really, really long time. One of the biggest projects is actually out of the Bank of Canada that I've been really close with, and I've had the opportunity to work with central banks around the world on the applications of central bank digital currency, the increased security, better monetary policy. They promote financial inclusion, depending on if they're retail or wholesale, modernizing cross-border transactions, and ultimately taking trades and settlements of trades for equities and securities and reducing them from the T+2 that exists today to potentially T+0 as well. So we've been lucky enough to work with Bank of Canada, Monetary Authority of Singapore, Hong Kong Monetary Authority, ECB, and the Bank of Thailand. There's a whole bunch of literature out on these projects. And what's interesting is that, you know, all of a sudden now there's projects that, you know, the Swiss Stock Exchange, the work that we're doing with them, and the work that we're doing with MasterCard, and the work that we're doing with CBDCs is all kind of converging to the same product, right? Which is kind of, maybe one day I'll just have like one big slide with all the products that we're working on. So I hope until now I kind of gave you a little bit of a taste of some of the very real things that we're working on and some of the applications of the technology. But if I had to talk about kind of at large what are the best use cases that are suitable for Corda, and I'm not saying that everything is suitable for Corda, but if you see these attributes inside your business models and inside some of the things you're working on, then Corda may be a relevant platform to think about. So data sharing across parties, privacy-sensitive environments, complex deployment environments, performance-sensitive transactions, and obviously kind of regulated business environments. These features are things that would lend themselves well. You know, there's obviously things that are broadcast-based or permissionless or things that are anonymous in nature, but maybe lend themselves not so well to kind of the world that we operate within. If I had to talk about verticals kind of broadly, this is kind of the way we map our ecosystem. So I won't call these all out, but you know, we're obviously very busy in finance. We were born out of finance, but we've expanded a lot since then. So you know, energy and commodities, insurance, GovTech, education, healthcare, trade, telecommunications. You know, the identity space we're really active in. So we're really busier than, you know, I shouldn't say this, but we're almost busier than what we can actually do, which is a wonderful problem to have. But this is kind of a snapshot of the lay of the land as it is right now. If you want to take a look at some of the publicly available projects on Corda, you can go to marketplace.r3.com. It's kind of like, I call it kind of the app store of Corda, even though you can't, it's a little bit more complicated than just like downloading it onto your Corda node. But this is a great place to go and see what's publicly available, get inspired. It can be split up by region, by industry, and by where it is in the kind of process lifecycle, pilot, POC, or production. And I think that's it for me. So unless there's any questions, oh, my slide just disappeared again, but unless there's any questions, I'm happy to finish it off. I see one question there.
Okay, let's take one question and let's break for lunch. So, do we have a question from Daniel?
Click through the next one. Sorry, was there a question over there?
I have some questions, but just one. How the notaries work? They work like they are centralized working somewhere, or
every customer needs to have in their infrastructure their notaries holding for something.
It's a good question. So the question was, how do notaries work? And it's really often that people will see the notion of a notary. I mean, a distributed system is only as distributed as its most centralized component, right? So if a notary was centralized, that would defeat the purpose of the whole thing. Notaries aren't centralized at all, although they can be. So it actually depends on the business context. If you want a single entity to run a notary on behalf of the entire network, because that's what the participants want, that can happen. Generally speaking, though, notaries are distributed amongst a subset of the counterparties that will all perform a consensus mechanism together and vote on whether or not this transaction is unique or not. With that said as well, it's important to say that the notary doesn't see any of the data itself. The notary attests to uniqueness without seeing the underlying actual transaction data. And it does that because it's hashed and encrypted by a hash. So really the notary is there kind of keeping track of the hashes and saying, have I seen this hash before or have I not seen this hash before? And if it's seen the hash before, that transaction has been spent already, and to eliminate double spend, it won't approve that transaction. So governance from a notary standpoint and from an implementation standpoint is entirely distributed if that's the requirements of the business.
So it would be like